All right, we are running. So we are going to welcome the folks that are popping in as we get going. And I'm Tamara Schofield with Leading Edge Real Estate. I'm here with Dustin Doobie with Guaranteed Rate. And we're here today to answer questions that we are getting on the regular about buying right now, selling in the days of COVID. How do you do it? What do you need? Can it be done? We've gotten, I think, a myriad of questions that we'd like to just kind of get out there and get answered for the general public. Feel free to join us. And if you have questions of your own, please comment and we will get them answered. Dustin, how are you doing this morning?
I'm doing great. How are you?
Yeah, well, good. I think I could use another cup of coffee. So this is good timing.
Yep, I'm with you.
Yep. So what are some of the questions that you've gotten, Dustin, in the last few weeks, whether or not it's related to COVID-19, but why don't you kick us off?
Sure. Yeah, absolutely. So what's nice is our process really hasn't changed from being prior to COVID to current, with COVID, because it's 100% virtual, contact free. Our office is open. You're allowed to come on in and I can meet with you and discuss different loan programs and the process, but it really can all be done over the phone, over Zoom, and then you can apply online through our digital mortgage. I guess one of the big questions we're getting is, what about appraisals? And this is more so for refinances because buyers don't have to, see the appraiser or be at the property during the inspection. But, what about appraisals? What if I'm not comfortable having an appraiser, coming to my home? There's a couple things with that. So one is if an appraisal is required, luckily in most scenarios, we can do what's called a desktop appraisal. So the appraiser can actually do everything remotely. What they will do is an exterior inspection. They won't actually enter the home, which is nice.
Yeah.
So again, there's no contact there. Certain loans, however, will require a full traditional appraisal. So in that case, obviously the appraiser has gloves and a mask. And you don't have to be specifically in the home with them. They can go in and do their thing. They can work it out with you whenever your comfort level is. So those are some of the biggest questions. But in general, the process really is just 100% contact free and utilizing technology, and it's I'm kind of going about it that way. So it's really business as usual.
Well, so it sounds like you guys are definitely providing options to folks, right? So whatever.
Right.
I mean, I know that it's been a moving target so far with respect to rules and regs and what we all need to be doing, and that's changed pretty regularly. Almost every week, it seems like we've got something new to take under consideration. So.
Right. Yeah. It's just everybody's and like all businesses are all adapting to the new reality at the moment, and so it's going to be, I'm curious to see how much of it sticks. The new ways of doing business and how much of it goes back to normal. In the coming months.
Right. Okay. So some of the questions that I've gotten are, how are we doing this? How does the hang on one second. How does the process work right now if I want to go out and look at houses and buy?
Right.
So certainly there are options, right? We've got folks who are not comfortable at all stepping into a home in terms of looking at property. And we have people that really have no concerns about it, or they're willing to suit up in whatever the appropriate manner is to get out and look at homes. And then you have sellers who may or may not want people in their homes. So at Leading Edge, we do have some philosophies on what we think is really best practices from a safety standpoint for our clients, sellers and buyers alike. Obviously selling vacant homes right now is the easiest. And in fact, we're seeing that the data is telling us that they are selling fastest and for more money than the occupied homes. So if a seller is able to move out of their home, either permanently or for a long stretch while we have the house on the market and get it shown, then that's a great option. It's proving to be the best option right now. if they don't have that option or don't want to move out of their home but still want and need to sell, then we have workarounds for that. So anything from a virtual open house to virtual tours that are private showings but virtual,
Right,
all
right.
options that we utilize for buyers and sellers so that they can still do what they want to do. A lot of people had plans, big plans for 2020, and they don't know now if they're put on hold or and for how long, right? So those are some of the big
Exactly.
questions. Yeah. So, I would say every person, every client, every property is very specific, is very unique. So how we address it and how we are able to serve those clients will be on a case-by-case basis and what everybody's comfortable with and what's smart and safe. So
Exactly, right.
again, options really become so much more important at this point. Folks definitely have options when it comes to financing, buying, how they do that. I think some questions still hold true no matter what's going on, COVID or no COVID. Folks still want to know, what kind of credit score do I need
Right,
to
sure.
get qualified? Can you
Sure.
talk to that a little bit?
Yeah, absolutely. So conventional loans, we're going as low as 620. That's been unchanged even with COVID. However, we're seeing some areas tighten up a little bit. FHA a little bit higher now. Used to go as low as 580. Now 620 is the bottom for that as well. Kind of pumping that up. Once you get below 680, there's certain overlays that we're running into as well. You're going to have 3 months of reserves, or your debt to income ratio can't exceed 45% instead of the traditional 56 with FHA. There's all these overlays that come into play that tighten it up to really make sure that if someone's getting approved for a loan, it's really in their best interest. Certain areas like that we're seeing it tighten up, but generally conventional loans are pretty much the same, um, even with COVID.
Okay. So are there any additional sort of layers to financing now with respect to folks and their employment, right? Because we know a lot of
Yeah,
folks
absolutely.
either became unemployed or furloughed at some point in the last 60 days, or they
Right,
may still be under threat of unemployment or furlough. So how does that work?
right.
Are the banks or
Sure.
the lenders instituting anything there?
Right. Yeah. So absolutely. So we're required to verify employment twice with the transaction. So once before we underwrite the file. The second time is within. It used to be within 10 days of closing, but now with COVID, it's within 5 days of closing.
Mhm.
And just do a verbal verification. And what we're doing for that is we're collecting the most recent pay stub preceding 15 days from the note date, as well as calling over to somebody in the HR department, maybe a manager, anybody who can get on the phone and verbally verify the person's still working there and their hours aren't changed.
Right.
We're definitely seeing a lot of that where people are being furloughed, their hours are reduced, maybe they just took an overall pay cut in general, or they're laid off, and that's a huge issue with when it comes to mortgages, because the number one thing we look at is the ability to repay, and if that's not there, then we don't have a loan that works. So it's something we're taking very seriously and doing all we can, this extraordinary time, that every time we close on a loan, that's in the borrower's best interest.
Right. Right. Yeah. And I know folks that are, they have gone back to work, but they know that it's under their employer having received those PPP funds. And so the concern for some of these buyers is that, yeah, I'm back to work now, but what if things
Right,
don't return to normal and those PPP funds run out? Am I going to be laid off again? So I've had buyer clients who
right,
have, they dipped their feet back into the water and then they quickly came back out because that there was really that uncertainty there, and they didn't want to get themselves
right,
emotionally tied into a property, and then of course contractually, although of course the financing contingency is always in play, but still nobody wants to get emotionally
right,
tied to a property that they ultimately can't close on. So
right,
um, part of avoiding that heartache, so they did make that decision. I think it was a smart one, and when things return to whatever the new normal is going to be, and they can feel confident shopping again, I know they will. So let's see, some of the other questions that I have received are things like, oh my gosh, let's see here. So what's going on in the housing market in general? So we still have a really hot seller's market. No surprise, no secret to anybody that prior to COVID, inventory was an issue. we did not have enough houses to supply the demand of the buyers that were out there. Well, that didn't change when COVID broke. Sellers, many of them removed their houses from the market, or they just didn't enter the market in the spring like they had normally planned to. So, and we still have buyers that are out there. And so really the general story is this. While inventory did decrease starting in March, the demand, the properties that went under contract, was still hitting that inventory that was there. We were meeting, the buyer demand was meeting the inventory that was there healthily. So it was still good news for sellers. And for those buyers who were out there, it's still a competitive situation. And sellers, I will continue to say, we still don't have enough inventory for those buyers that are out there. Even though that pool has also dropped, it hasn't completely dried up. So if you are interested in selling your house this year, you may want to still consider it. And doing it now is probably the best time to put your house on the market, because there's very little competition out there. Now, are things going to change? Yes, I think we're going to see the market open up a little bit come the summer, end of the summer. We probably will have that delayed spring effect in the market as things improve or change. But sellers, that means you're going to have more houses to compete against. You're going to have to do more to stand out from the crowd. And buyers, you're just going to be competing as much as you were last spring in this fall. So I think it's just going to be really a delayed market, and there will be a flood of properties that come on that will get gobbled up really quickly by the buyers that have been waiting patiently, or that have now returned to the market and are ready to go. So that's kind of a snapshot of the real estate market in general here in the Massachusetts area, and New Hampshire as well. I am licensed in both states, so we're seeing that really the demand has not just dried up like I think a lot of people expected that it would. If you want, additional information and to drill down on the stats in your particular town, then reach out to me and I can certainly do that for you. What else?
Yeah, I'm seeing the same thing, Tamara. I'm seeing, let's say, especially in the last maybe two to 3 weeks, I've seen a lot of buyers that I was working with a few months back, and then really kind of pumped the brakes when COVID came around. Now they're coming back out and they're out there making offers and want me to update their pre-approvals, and we're kind of business as usual again. So definitely starting to see a turn. A lot of buyers coming back to the markets, and like you said, there's still inventory out there. Maybe it's not as much as it was, prior, but still it's there, and the market is still moving, and it is a great time to take advantage of it while there's, while there's less competition, right? So
yeah,
it's definitely what I'm seeing from my end as well.
Yeah, it's less competition for everyone right now. Sellers, you have less competing properties on the market for sale, and buyers, you have less buyer competition out there. Even though there is still competition, the numbers don't lie. I mean, there is a percentage of the population that is unemployed or underemployed, and they have to remove themselves from the market. You have less competition right now. Doesn't mean that you're not going to face some competition, but it's just less. So take the win and run with it. If you're still able to buy and you're still willing to get out there, do it. So we talked about credit scores. I see questions here about down payment. What can, and again, this is just a question, COVID or no COVID, but what kind of down payment is required? What can people do? What are the programs out there that help folks out?
Yeah, great question. So if we're talking about, buying a primary residence, first-time home buyers can go as low as 3% with a conventional loan. FHA requires 3.5% down. You can do, if you're not a first-time home buyer, you're looking at, again, FHA 3.5% down. Conventional, you can do as little as 5% down. Everyone prefers to do 20 if they can to avoid PMI, which everyone loves to talk about. So yeah, it's true. If you do 20% down or more on a conventional loan, the PMI is not required. It's not there. FHA has it regardless. The only time you can get away with it with FHA is if you do 10% down or more. Then PMI, well, it's not PMI at that point. It's just mortgage insurance through FHA, but it drops off after 11 years. So that's kind of one of the FHA is a great program for some people, but that's one of the drawbacks. If you can do 20% down, go conventional, and keep your monthly payment as low as possible by avoiding PMI.
Okay, great. So for folks that are rolling in right now, I just wanted to introduce myself again, Tamara Schofield with Leading Edge Real Estate. I work in the Merrimack Valley area predominantly. I am licensed in both Massachusetts and New Hampshire. And today I've got Dustin Doobie with me from Guaranteed Rate, my loan partner who helps me to get you guys, buyers out there, qualified. So also licensed in multiple states, Dustin, right?
Yep, yeah, license in Massachusetts and New Hampshire, so same as you.
Good. So some more questions here. Folks want to know what the expenses are associated with buying. Okay, so really great question, because I think a lot of people just think they need to come to the table with their down payment and that's it. So let's start from the top. You have good faith money that's put into escrow accounts that financially binds you to the contract. That can be anywhere from 3 to 5%. You can certainly put more down, but I think 5% is pretty respectable in most purchases. And this needs to be liquid cash. It needs to be on hand. It can't be tied up somewhere that you can't get access to for weeks on end. You need to have money for your inspections. When you purchase a home, many times you may want to have that home inspected. So you're going to have your general building inspection. If the property is on well water, you're going to want to have that well water tested and the components inspected. If the property is on septic in New Hampshire, the buyer is responsible for the septic inspection. And other things that come up, if their home has a chimney with a fireplace that you want to use, you may want to consider having that chimney inspected. If there's a basement, specifically one that's finished or one you intend on finishing, you may want to have the home tested for radon in the air and the air quality with respect to radon. So those are some of the inspections that you can expect to maybe want to have. Not everybody will have inspections, but it's a good idea for most people. You need to have your homeowner's insurance paid for upfront in full for 1 year, for that first year prior to closing. Yes, you can pay for the through your escrow payments in your mortgage. You will be paying for the next year to renew that homeowner's policy, but you need to have that paid for upfront first prior to closing. So there's another expense. And if the home is has an oil tank, then quite often the seller of the property is going to want to be reimbursed for the balance that's in that tank based on whatever the average daily rate is for oil per gallon. So you can expect to bring a check to closing for that as well. And then of course there's your actual closing costs. And Dustin, I'll let you speak more to that. And I know there's some variance there. But sure. All in all, it could be, several thousand, tens of thousands of dollars sometimes to close. So every situation is very unique and specific. So again, have a really clear talk with your agent before you start the buying process, so you have a full understanding of what's required of you. And the closing costs, I'll let you speak to, Justin.
Sure. Yeah, so there's quite a bit of variance between each transaction. But I do want to touch upon one thing, the down payment. So down payment's part of it. So the biggest thing with down payment is we look at 2 months bank statements, so we see where the money's coming from and make sure that's sourceable. Can't be cash on the mattress, so to speak. Needs to be in the banking institution. We need to be able to track it for the past 2 months and make sure that it's again, that it's sourceable, that's clean money. So for closing costs, there's going to be a number of different fields or kind of buckets to think about. So it's obviously the lender fee, right, to pay our staff who worked on the loan and closing the loan for you. Then the bulk that's going to be between attorney's fees and taxes and just state fees, right? It really varies quite a bit between each transaction, depending on the expense of the price of the property and so forth. For example, title insurance. So there's there's owner's title insurance and there's lender's title insurance. So owner's title it's optional, strongly recommended, and I will definitely push you to do owner's title. It's going to protect your ownership in the property if there's ever an issue with the title moving forward. So it's always good to have. You buy it once and you have it forever. Lender sale is required regardless for every transaction, protects the lender's position as well. Having, doing the mortgage, having a lien on the property. So everything kind of adds up, and really, I would say a good estimate for just kind of a straightforward transaction, maybe in the $400,000 range. You're probably looking at closing costs of $4,000 to $6,000 or so. And the second half of it is your prepaids, right? Like you're talking about the escrows. So we're going to prepay taxes, your property taxes, as well as your homeowner's insurance. So like Tamara said, so we're looking at for the homeowner's insurance, that needs to be active the day you own the property and moving forward, right? So at closing, you can either pay that premium as you're shopping around for our homeowner's insurance provider. You can either pay that premium before closing, or you can pay it at closing. And then as you make your monthly payments, part of that monthly payment is going into your escrow account so that when your homeowner's insurance becomes due, it's paid on time. Okay, so the money's already in there, so it's budgeted for, and you don't have to do anything. And same thing for the taxes. So in Massachusetts, at least, it's different in New Hampshire, but we pay property taxes quarterly. So what happens is your first tax bill is due in February. It covers January, February, and March, and then so forth moving forward. Your next payment's in May, covers April, May, and June. You get the picture. So make sure we make the first quarterly payment at closing, as well as maintaining a 2-month cushion for the escrow account. So now you have your closing costs plus your prepaids all together. Again, it varies really quite a bit, but I've seen it be as low as altogether $7,000. I've seen it be $15,000. Really depends on the property. If you're going up in New Hampshire, property taxes are a lot more expensive. Typically, they're a lot higher. So the escrows are quite a bit. In addition to the fact that they make their property tax payments semi-annually. So now instead of just prepaying a quarter of the year, we're doing half the year plus the cushion. So it really can add up quite a bit. On top of that, there's also some other nuances of New Hampshire, such as the transfer tax. So the transfer of the property from the seller to the buyer, it is $15 per 1,000 of the purchase price, split between the buyers and sellers. So if you're a buyer, you're on the hook for $7.50 per 1,000 of the purchase price. So that's one thing you don't have in Massachusetts. So we're talking about buying in Mass versus New Hampshire. Yeah, New Hampshire's a little bit more expensive for those reasons, but it's nothing that's out of the ordinary.
Right. Yeah, buying in Mass versus New Hampshire is definitely a topic that comes up for me when I do my initial consult with buyers, because many buyers will come to me and say, I want to buy in New Hampshire because I'm going to get a better deal. It'll be way cheaper up there. Well, not always. So it's really a conversation to be had before you jump in, because not only are there additional upfront costs to the buyer, the taxes, the real estate taxes up there can really sometimes put you over the edge when it comes to what your monthly payment might be. So certainly good to have that sit down with a qualified agent beforehand and have that conversation. So one other cost actually that I thought of as you were speaking, Dustin, is that in the days of COVID, because access to homes have been limited with the just really from a safety standpoint, the fire departments in Massachusetts, not in New Hampshire, it is required that you have your smoke and carbon monoxide detectors tested before the closing. And ordinarily that's a seller's responsibility. They would have that done prior to the closing. The local fire department would come in, inspect, make sure that there were the correct number of detectors, that they all worked. And so that certificate was issued and then brought to closing. So the buyer was confident and comfortable that the home was safe from that standpoint. That's not being done at the moment. And different towns are handling these inspections differently. But by and large, what has happened is the state has issued some regulation that allows for closings to occur without that certificate. And really, it's an addendum to the closing contracts. And it says that the buyer now takes ownership, takes responsibility of not only making sure that the home is properly equipped with what's needed for smoke and carbon detection, but also that within 90 days of the end of the the state of emergency, they will have the fire department come in and inspect those units. So it's not completely waived. Folks are not forgiven of this particular task, but now the responsibility has been shifted from seller to buyer. And so parties need to agree on that before. And so for buyers, again, that expense needs to be factored in. Sometimes it's really no more than the inspection fee, which for your single family homes in Massachusetts is $50 typically, and for multifamily or larger structures it can be $100 or more. Depends on where you're located and what the structure is. So that's not a big deal. But if you now have to outfit a home with brand new systems, carbon monoxide and smoke detectors, those can get pricey. So I've seen homes that, you know, some of them a couple $100 worth of units on top of the inspection fee. So it's not a ton of money. If you're buying a $400,000 house, then a couple $100 really shouldn't be a ton of money, but I'm all for getting it all out there, laying it on the table and making sure that every dime is accounted for, or at least the expectation is set that you guys will need to be responsible for this. So there's one more thing, again, COVID related to buying right now.
Right. Yeah, that's a great point. And yeah, I think it's very important. Every time I'm sitting down with somebody and I get them pre-approved, and I always I look at their price point, and I really I'll look up wherever they're looking. Let's say they're looking in Beverly, Massachusetts, right? I'll look up houses in Beverly, and that's in that price range, and get a general idea of what the taxes are, you know, what I think the homeowner's insurance will be, all that sort of stuff. And I give them a really good estimate. I say, hey, so between your down payment, closing costs, and your prepaids, here's what I think you're going to have to you know, bring to the table. You know, here, let's say it's $20,000, whatever it is. I say, you know, here's that number. Are you comfortable with that? And if they're not, then maybe we need to scale it back and look at a cheaper property, or maybe we look at, you know, the idea of a seller credit, something like that. But we have to, you know, at that point get creative and see, you know, what are they comfortable doing to make this, you know, to make it work. And if they're not, then hey, if it's not the right time, it's not the right time. But at least you're upfront, again, setting the expectation, letting them know. So it's not just a surprise at closing, you know, how much money they need for the transaction. I should really know that upfront.
Right. Yeah, I think that monthly figure, so many people, you know, they've got a budget for their lives, right? And how much they want to spend on their house is certainly a big part of that, whether they're renting or buying. And by the way, if you're renting right now, we seriously need to talk, because nuts. So let's, you know, reach out and let's get that. I heard about a couple who wanted to rent a place down in Charleston for $3,500 Charlestown for $3,500 a month. And I thought, are you kidding me right now? So, I mean, that's more than my mortgage. But in any event, I digress. You know, so you've got this number, you've got this budget that you're working with. So if you've got a figure that you have in mind for your home, right? What do you want to spend a month? People don't want to be house poor, I've found, many of them. So back into that number, right? Don't say I need to have X in a house, because if you've got, you know, random figures, if you've got $2,000 that you're comfortable with for your monthly payment, and that's all in taxes and insurance, then that's your figure. That's it. Be comfortable with that. But you can't then expect to go out and find that 4-bedroom, 2.5-bath house with the attached garage and the marble floors and the gorgeous countertops, stainless steel appliances. That's not happening here in Massachusetts. You may need to consider to look at, like, I don't know, Boise, Idaho. But in any event, you know, you really get settled with that figure and back into it, and then really get settled into that home, and whatever home that affords you, it's still yours. It's your house. You're investing in yourself and in that equity for you. The market is so fluid. If in a few years your situation changes and you can afford more, well, now you're talking about making a move, and you're really, you know, able to house up. But invest in yourself now, no matter how small it might be. It's still yours. And then you can really just capitalize on that and grow from there, grow the house from there. Let's see, other questions coming in. The closing costs, we did talk about those. That does vary, but average, typically $400,000 home in Massachusetts, you would estimate what, Dustin?
Again, it really does vary quite a bit, but I'd say anywhere for closing costs, $4,000, $5,000, $6,000 range.
Okay. All right. What other kinds of questions are you hearing or seeing out there, Dustin? Concerns that people might have right now?
Sure. I think we've pretty much covered it. I'm not getting too many yeah, areas of concern on my side because again, really it's just business as usual. Um, but yeah, I guess the biggest thing is that we haven't spoken about too much in depth is well, you know, if I lose my job, you know, what about job security? And I tell everybody, hey, if you're really not comfortable with your with the continuation of your employment, then it's just not the time. Truthfully, it's not because, again, the biggest thing we're looking at is the ability to repay. And if you're expecting to be furloughed or laid off, anything like that, it's just not a great time. And you don't want to put yourself in that position where now you have a mortgage, but you don't have any income. Um, through again, we verify employment twice with the transaction. We're very thorough with it. We do it before underwriting the loan and once before closing, and to make sure that your income is there, your ability to repay is there, and we absolutely put you in the best situation possible. Because the last thing you want to do is on your home and then lose your job, and now you're stuck with this mortgage payment. Um, so it's a very something we take very seriously and really vet out as much as we can.
Yeah. Yeah. And you're going to have folks who are going to, there's always risk takers. So people who want to roll the dice and say, you know what, I may lose my job during this buying process, but, you know, I want to go for it because I may not. And I don't want to be sitting on the sidelines waiting to buy when that was my plan all along. And to those people, I say, you know, if you are prepared for that emotional heartache, if things fall apart, then, by all means, let's rock and roll. There will always be the financing clause, that contingency that allows you to step back from the purchase if you do lose your job during the buying process. That, you know, you won't jeopardize any down payment or escrow money that you have. So it's really then just about preparing yourself for that emotional letdown. And some people can handle it just fine and others cannot. So I think, again, that's really case by case basis. So let's see, selling virtually. Oh, okay. So selling virtually, someone has asked, how does that work? So again, I mentioned this at the top of the hour, the options for sellers and buyers there are a few of them that we can employ, and I think it's really case specific. So is the home occupied? If it's occupied and the seller really doesn't have an option to go to a second home, or has already purchased their next home and is ready to move out, then there are, you know, things that we can do with respect to getting the house shown if you need to stay and live in there, but you aren't comfortable having people come through. Open houses really aren't the smartest idea right now. They may be allowed, but personally, I just don't see that it's necessary right now to have herds of people coming through. And I can tell you it's herds. I have colleagues who have had showings set up, and 60 showings set up for a saleable property. One, that speaks to the demand that's out there, and two, it speaks to the ability for folks to maybe get into a scenario with respect to safety that they don't really want to be in. So I certainly feel that private showings are the best, and if at all possible, virtual private showings. So we can do virtual open houses, we can do virtual private tours, and these are tours that really are, you know, very, we're finding them to be, there's a lot of silver linings here, right? So folks don't feel rushed. They're not in a room. They're not trying to all squeeze into a 6x8 bathroom and take a look at the finishes in there. They're not all piled up in the living room trying to get a sense of how it might be if they were there with their family. And you've got, you know, 3 other families milling around and the agent wondering, you know, are you working with someone? So it's a very different type of open house, but I think that the feedback overall is that it's great. You are sitting in your own home, looking at this house, touring it, and the agent or the seller is there to give you descriptions of every room and the finishes and what the light might be like and what they do in that room on any given day and how they spend their time there. So it's different, and in some cases better, I think. So those are some of the options. And again, same with a virtual private tour. It's the same idea. And so sellers, it's again very doable, and you know, we do whatever we can to make it safe for you and whatever works for you. So, you know, overall, I think the name of the game right now is options for everybody. any consumer, no matter what you're looking to buy, whether it's going into Walmart or going to your local haircut place, and just having options as to how business can be done is really key, and communicating that, right? So communicating what you're comfortable with, what you're not, and letting us know how we can best help you is really, really key. So I think the questions are starting to slow down. And so I'm going to say we could probably call it at this point and just wrap it up. And I'm so glad for people who've joined us and popped in and popped out and had maybe their first or second or third cup of coffee with us. So again, I'm Tamara Schofield with Leading Edge Real Estate, and I'm here with Dustin Doobie this morning, and we are so happy to have answered your questions and addressed some of your concerns with respect to buying and selling. Reach out to either of us if you have any further questions or want to talk more. Our information is available and will be available on the link below. Thanks, guys. Dustin, thank you so much for joining me today. Have a great day. Enjoy the sunshine. Make it awesome.
Yeah, thanks for having me. Thanks everybody for joining.